Good evening, everyone, and welcome to our March IHMVCU Financial Fitness Workshop. I'm Addie Hendrick, the Member Development Intern here at IH, and we are so glad you could join us today to learn more about Piggy Banks to Paychecks 2.0, earning, spending, and goal setting. So with that, some things that we will learn today. We'll start off with learning about how earning, saving, and growing your money really works. While goals turn someday into done, smart ways to spend without draining your stash, and simple habits that make your money work harder for you. So whether you're a parent, a kid, a teen on here, all this can apply to you. And if you're mostly parents probably on here, you can help your kids to learn more about some money skills. So with that, I'm going to introduce our presenters. We have two tonight, Ryan and Laura. So Ryan brings 6 years of credit union experience across 3 organizations. She has hands-on experience in frontline service, lending, and leadership roles. She has been with IH for about 2.5 years now, starting out as a financial coach and now being the assistant branch manager of our Des Moines location. Each place and position has strengthened her passion in serving members, supporting her team, and living out the people helping people mission. She's proud to have built her career in credit unions, and she looks forward to continue to grow in an environment where member relationships and community truly matter. So with that, I'll give a warm welcome to Ryan. Perfect. And now for Laura. Laura has been with IH for 2.5 years as a financial coach. So she brings with her 8 years of experience in the banking industry. She began her career as a member service representative at a small local credit union in Portland, Oregon, where she gained hands-on experience across nearly every aspect of banking, including fraud, loans, marketing, accounting, collections, and everything in between. With a strong passion for helping others navigate their financial journey, Laura is dedicated to empowering IH members with knowledge and support they need to succeed. So with that, I would like to welcome Laura. Perfect. So before we jump in, I want to remind you all that everyone is muted for the entirety of the session. If questions arise during it, please place them in the chat and we will address them live at the end of the webinar. Along with our giveaway, we will choose that at the end of the webinar too. So this session is also being recorded for future viewing purposes, just to let you all know. So with that said, I will hand it over to Ryan and Laura.
Hello again, this is Ryan. Before we jump into any new material, let's do a quick refresher. We're going to revisit some key takeaways from our first Piggy Banks to Paychecks that was held last May. So these next few slides will walk us through some of what those big ideas were. And if you didn't attend that workshop, Addie will drop the link in the chat if you want to watch it later. So one of the very first things we talked about centers around the question, why is financial education so important? Well, there are a few reasons. First and foremost, it builds a foundation for responsible money habits in adulthood. The earlier someone learns about money, the more confident they become. Secondly, then, it creates independence, which means less guessing and more informed decisions. Lastly, it helps kids and teens understand the value of money. It teaches them to think before spending, and it encourages smart, informed financial choices. Money confidence doesn't just happen, it's taught and practiced. This statistic is very powerful, and when I first heard it in last year's workshop, I couldn't believe just how early you really need to start thinking about these things. What it is saying is that most habits, including money habits, are formed and developed by the age of 9. That means those elementary years are critical. Habits don't just appear. They're built through routine and repetition. By 3rd grade, many patterns are already solidified. That's why starting financial conversations early really matters. We're not just teaching money, we're shaping lifelong behavior. If we wait until high school to talk about money, we're already behind. This really has me thinking on when I need to start talking to my daughter about these things, and she's only 1. That's how prepared I want to be, especially after reading this. Which brings me to another big takeaway from last year. Parental mindset does matter. It is important to keep in mind that kids learn more from what we do than what we say. We should be focusing on education and empowerment, not instilling fear or shame when it comes to handling money. Aim to build a positive, responsible money attitude. Model healthy financial behaviors at home. Be honest and transparent about money in age-appropriate ways, and create space for questions because it really is their curiosity that will help build their confidence. So now that we have reviewed, I'm going to pass it off to Laura to talk about age basics.
Thank you, Ryan. Now that we've refreshed the basics, let's level up our money game even more. The first thing to remember is that teaching kids to save isn't a one-size-fits-all approach. It grows and evolves as they age and as their understanding develops. In the early years, children are just beginning to grasp the basics of money. Coins and bills start to become fascinating tools for learning. Here's how parents can start teaching savings habits to kids 3 to 6 years old. Set savings goals. Help children identify short-term goals, like saving for a toy or a treat. Encourage them to contribute a portion of money they receive towards these goals. Use visual aids. Introduce piggy banks or clear jars so children can physically see their money grow. Letting them decorate their own container can make savings feel more fun and personal. Model smart saving. Children learn by observing. Model good saving habits by discussing your own savings goals and actions, such as saving up for a family vacation or a new household item. As children move into middle school, their understanding of money starts to grow. At this age, they're better able to understand the value of money and begin learning how to make choices about how they use it. This is a great time to start building habits around saving, spending, and planning ahead. Here's how to build on their foundation. Introduce allowances. Giving children a regular allowance tied to chores or responsibilities can help them practice managing money. It's also a good opportunity to talk about dividing money into spending, saving, and giving. Encourage delayed gratification. Help children distinguish between needs and wants. Encourage them to save for bigger items rather than spending impulsively on immediate wants. Open a bank account. Taking children to the bank to open their first saving account can make money feel more real. It's also a chance to introduce the idea of interest and how money can grow over time. During adolescence, teens often start earning some of their own money through part-time jobs, allowances, or small opportunities in their community. This is also when financial decisions start becoming a little more complex, which makes it a great time to start building strong money habits. When I was younger, I loved finding creative ways to earn money. I had lemonade stands in the summer. I even sold my drawings to other kids in school. One year, my friends and I really wanted to buy concert tickets, and we thought we had a brilliant plan to make money quickly by going door to door, asking neighbors if we could walk their dogs. Unfortunately, our parents found out pretty quickly, and we got in trouble because it wasn't the safest idea. So the lesson there is creativity is great, but always check with your parents first. Here's a few tips to guide teens through this stage. Teach budgeting. Help teens create a budget that includes saving for short-term goals like an electronic device and long-term goals like car or college expenses. Encourage entrepreneurship. Support your team in exploring entrepreneurial ventures such as mowing lawns, babysitting, or dog sitting. This can teach valuable lessons about earning, saving, and managing money along with organizational and communication skills. Discuss financial responsibility. Talk openly about financial topics such as credit cards, loans, paychecks, and interest rates. Emphasize the importance of living within one's means and avoiding debt. Now that we've discussed age basics, I'm going to pass it off to Ryan to talk about how to earn money.
Just like Laura said, now that we've reviewed the importance of different age levels, let's talk about real ways you can start earning your own money. Because earning money isn't just about having cash. It's about building responsibility, confidence, and independence. The earlier you start, the more comfortable and capable you'll feel managing it. Well, I'm sure a lot of you have heard the saying, money doesn't grow on trees, and that would be correct. Money comes from work or providing value. You get paid when you solve a problem or help someone. The more skills you have, the more earning power you have. So it is good to think of skills as your money-making tools. It is important to focus on learning and improving these skills, then to increase opportunities to earn more money. We all have to start somewhere, right? So here are some beginner income ideas to help your child or children learn the importance of earning money. They can do extra chores around the house, start a lemonade stand, which I'm sure a lot of us have done or thought of doing when we were kids, pet sitting, helping the neighbors out, or even selling crafts. Once they start getting a little older, though, here are some advanced income ideas to keep in mind to help your teen find a job they actually like to do. It will help them from major burnout and really start to enjoy working. They can do things like getting a part-time job, babysitting, lawn care, starting a small business, or even showcasing their freelance skills. Remember, the skills you have are so important. These skills and things you are interested in are your superpower. So it's good to keep in mind the better your skills, the more money you can earn. Practice builds value. Education increases opportunities. And overall, then, it connects earning to long-term goals. Which one of these options makes you value money more? Is it an allowance, which is just given to you, or is it earning your money, which is money that you have worked for? I personally would say that earning your money is more valuable and makes you appreciate the things you purchase with that money more. When I was a kid, probably my elementary school days, I remember my parents always telling me that money is not just given, it is earned. So I remember that there was this toy that I really wanted. I think it was either a Bratz doll or a Littlest Pet Shop playset at the time. I can't remember for sure. But instead of my parents just buying it for me, my dad told me if I helped him around the house and do some yard work that week, I'd be able to get the toy myself with my own money. I swear I was hauling sticks for days, and eventually I got paid for doing it, and my dad took me to the store where I then purchased the toy myself with the money that I earned. And I remember just being so proud of myself because I had actually worked for that money, and I really do think this was one of the first times I started to understand the importance of money as well. So now I want you to consider this before I let Laura take over to talk to you about how to spend your money. If you had $100, would you spend it, invest it, or save it? Think about this as we move on.
So now that Ryan talked to us about earning money, how do we spend that money wisely after earning it? First, let's look at this graphic. This is the common money spending trends for teens in 2024. Does any of this shock you? The top 3 most common items that teens are spending their money on are clothing, food, and video games. For example, think about how often teens might grab food with their friends after school, buy a new hoodie or a new pair of sneakers that they've been wanting, or spend money on a new video game or in-game purchases. Even small, frequent purchases can add up quickly. I saw this firsthand when I had my first job at a clothing store. Customers would often grab dozens of dollar items from the clearance section, thinking, this is cheap, but when they got to the register, they were surprised at the total. It really drove home how easy it is for money to disappear faster than you expect. That's why learning how to budget and prioritize your spending can be so helpful at this age. When you get paid, whether this is weekly, bi-weekly, or monthly, it is important to tell your money where to go right away. This will help you prioritize and plan your spending. 1, set a weekly or monthly spending limit. 2, decide ahead of time what's okay to buy. 3, track where your money goes. Parent tip, give kids room to make small mistakes while the stakes are low. This will help them learn not to do that again and prevent big mistakes from happening when stakes are higher. Pausing before purchasing is also a very important habit to start. Try to wait 24 hours before buying. Money follows intention, not impulse. When you pause before purchasing, you give yourself power. Ask yourself the following questions. Do I still want this tomorrow? Is it worth my time earning it? If I had to work 5 hours for this, would I still want it? Could this money be saved for the future instead? This is a quote I found that is very helpful. Pause before you purchase. Needs build wealth. Emotions destroy it. I'm not a stranger to impulse purchases. In fact, when I'm thinking of buying something on an impulse, I often think of the time that on a whim, my sister and I decided to buy tickets to Disneyland because flights were on a special sale. I was so excited and impatient that when the page wasn't loading, I kept clicking the button to try again. Well, it turns out the purchase had actually went through 3 times, and suddenly I had about $1,200 in charges instead of $400. My account went negative, I got hit with overdraft fees, and I had to wait about 3 days to get the extra charges refunded. That experience definitely taught me a lesson about slowing down before making purchases. Even if something seems exciting in the moment, taking the time, like waiting 24 hours before buying, can help you avoid mistakes and make sure it's something you really want. Reminder, parents, your role matters too. Model smart spending. Kids learn by watching. For example, when shopping together, explain that you're choosing something you need, not just what you want. Maybe it's a nice dress for a work event. Talk openly about money. Avoid arguing about finances in front of your children. They may get a negative impression of money. Disagreements happen, and that's okay. Be honest about it, but some details are better shared when they're older. Let kids practice money-making decisions. Give them opportunities to make small spending choices so they can learn consequences safely. Avoid rescuing every bad purchase. For instance, if your child overspends on gifts and can't cover something else, don't automatically bail them out. It's a tough lesson, but important. They learn that spending wisely matters.
Thank you, Laura. Now that we have learned about spending money, let's discuss how to set reasonable money goals for kids and how you can help them achieve these goals early on. When you think of setting goals, these are things that normally aren't accomplished in a day. They are normally things that you want to accomplish in the future, or in other words, turning that someday into done. Goals really do give your money direction. They make saving easier, and they build patience and discipline. So this is a chart that you may be familiar with, you may not, but is definitely something I've always kept in mind when I am setting goals and working my way towards achieving them. So for example, let's say I want to buy a new bike. The bike costs $200, so I'm going to set aside $20 each paycheck over the next 10 weeks to get it. How does this fit the SMART goals framework? Well, it is specific. I am saving money for a new bike. It is measurable. $200 total, saving $20 at a time. It is achievable. Small, manageable amounts each paycheck. It is relevant. It supports a personal goal of buying something I want. And lastly, it is timed. I have given myself 10 weeks to reach this goal. It is important to keep in mind, though, not all goals are the same. There are short-term goals, and then there are long-term goals. Short-term goals normally take weeks to months to accomplish, such as purchasing a new pair of shoes, video games, or even concert tickets. Long-term goals, on the other hand, can take months to years to accomplish, such as purchasing a car, going to college, going on a big trip or vacation, or even just setting enough money aside for emergency savings, which, by the way, is very important to have. It is good, though, to keep in mind that consistency really does build confidence. For kids and teens, this means saving a little regularly, tracking your progress, and staying committed throughout. For parents, this means helping your kids calculate timelines and savings plans, encouraging consistency over perfection, celebrating milestones, and overall making sure that you are supporting the plan while also keeping in mind that you don't end up taking over the plan, because it is important for them to do this on their own, but with your help, of course. As a parent, I know this can definitely be difficult at times, but watching your kid learn something new and actually apply it is so rewarding, and I always just have to remind myself of that from time to time. I'm going to pass it back to Addie.
Perfect. Well, thank you, Ryan and Laura. That was amazing. We loved all the content. And so now we have a few minutes for questions. So if anyone has any questions, you can place them in the chat. I have some to get us started. And Laura or Ryan, either of you can answer this. So do you have any tips on how to motivate my team if they're not interested in earning money to make their own purchases?
Yeah, so I think motivation often comes from like connecting to earning something that they care about. So I think you should ask your teen what they want, help them set a goal, maybe a gadget, a concert, or saving for college. And then when they see their work directly leads to something they value, they're more likely to get involved. So you can also try and make it fun by turning small chores into a game or introducing entrepreneurial projects like pet sitting or selling crafts. But I think starting small and celebrating the wins helps really build confidence.
Yeah, awesome. Great answer. We have one more question. How do you explain using a debit versus credit card to a team?
Yeah, so using a debit card is really using money from your piggy bank. But credit, on the other hand, is like borrowing a toy from a friend. You have to give it back, and if you don't, then there's a consequence. For teens, I would say you can let them practice with the debit card first and teach responsible credit use gradually, emphasizing paying on time and also avoiding overspending. So yeah,
Awesome.
debit cards are, yeah.
Yes. Well, thank you so much. If anyone else has any other questions, you can place them in the chat and we can email you later. With that, too, we have a QR code to book an appointment. If you would like, you can either book this appointment with Ryan or Laura. They would both be happy to talk to you, meet with you if you'd want. If Des Moines is too far away, not your branch, you can also go to our IHMVCU website, too, and book with a branch that is closer to you as well. With that, too, I'd also like to talk about our Balance Builder Junior Savers. This is something for kids and teens if any parents are interested. It just starts with $5 to open. Your kid can earn rewards for saving regularly. It's a safe and simple way to grow their savings, and it helps them practice money skills now. And we'll even deposit $50 in their account if they open it too. So that's definitely something to look into. If you're interested, you can go to ihmvcu.org/junior to learn more. Lastly, we just want to say that you can watch for your inbox for a recording of this webinar, a feedback survey, and then information about our next workshop. It'll be in person in April. It's on mortgage, roadmap to home ownership. We hope you will join us again, and we thank you so much all for coming tonight. So yeah, hope you have a good evening. Thank you.